Unforced errors in trading. How to avoid mistakes. Hello, my amazing listeners. Welcome to the Trading Triumph podcast. I'm Monsi, your stock market mentor, and I'm beyond thrilled to have you here today. We're diving into a super exciting topic, unforced errors in trading. Those mistakes we make not because of the market, but because of us. These errors can stop us from winning. But guess what? We can fix them. So grab your coffee, get comfy, and let's embark on this high-energy journey to become smarter traders. What are unforced errors? Imagine you're playing cricket. You hit a perfect shot, but then, oops, you accidentally touch the stumps and get out. That's an unforced error, a mistake you made, not the opponent. In trading, unforced errors are mistakes caused by our emotions, lack of discipline, or poor decisions. Today, I'll share my stories, break down these errors, and show you how to avoid them so you can shine in the market. Step 1. Understanding unforced errors. First, let's get clear on what unforced errors are. These are mistakes we make because of our own choices, greed, fear, impatience, or lack of a plan. Let me tell you a story. When I started trading, I bought a stock worth $500 without a plan. I thought, this stock's gonna fly. But it crashed and I held on, thinking it'll bounce back. Spoiler, it didn't. I lost $200. That was my fault. I traded emotionally and didn't use a stop loss. Unforced errors are our mistakes, not the market's. Let's break them down step by step and learn how to avoid them. Step 2. The most common unforced errors. Number 1. Over-trading. Trading too much. Friends, you don't need to trade every day. I once placed 10 trades in one day out of boredom. Result? A 30% loss in my account. Overtrading happens when you trade too often due to greed or boredom, racking up fees and ruining your risk management. Tip: focus on 1 to 2 high-quality trades. Quality over quantity. Number 2, chasing the market. Ever heard a stock's up 20% and thought, I gotta buy it? I did. A stock jumped 15% and I bought it in excitement. Guess what? It crashed right after. That's chasing the market. Entering trades too late. Tip: be patient. Wait for the right entry point. The market always gives opportunities. Number 3, ignoring risk management. This was my biggest mistake. I once risked 50% of my account on one stock thinking it was a sure win. It crashed and so did my account. Risk management means using stop losses, diversifying, and risking only 1 to 2% per trade. Tip: always set a stop loss, risk only 1 to 2% of your account per trade. Number 4, revenge trading. Ever lost money and thought, I'll double my trade to recover it? I did. I lost $1,000 and in anger placed more trades. Result? Another $2,500 gone. That's revenge trading. Tip: take a break after a loss. Trade with a calm mind, not anger. Number 5, trading without a plan. Trading without a plan is like driving without a map. I once bought 5 stocks without knowing my entry or exit points. Result? Confusion and losses. Tip: make a plan for every trade. Entry, exit, and risk-reward ratio. Number 6, FOMO, or fear of missing out. When you hear, this stock is skyrocketing, and buy without research, that's FOMO. I once bought a stock based on social media hype. It tanked 40%. Tip: do your own research. Don't follow the crowd blindly. Number 7, over-leveraging. Leverage means borrowing to trade bigger. I once used 5x leverage, thinking I'd make huge profits. The market turned, and my account was wiped out. Tip: use leverage sparingly. Only risk what you can afford to lose. Number 8, ignoring stop losses. I once removed a stop loss hoping the market would reverse. It didn't, and my losses grew. Stop losses are your safety net. Never ignore them. Tip: set a stop loss for every trade. It's your best friend. Step 4. How to control emotions. Emotions are the biggest enemy in trading. Fear, greed, and overconfidence can lead to bad decisions. Let me share a story. My friend Raj made a 10,000 profit and got so overconfident that he traded without research. Result? He lost all his profits. How to avoid this? Journaling. Write down every trade, why you took it, what went wrong. This helps you learn. Meditation. Spend 10 minutes daily meditating to stay calm. Take breaks. If you're emotional, step away from the trading screen. Step 5. A story that inspires me. Let me tell you about Jesse Livermore, one of the greatest traders ever. He once traded against the market trend and lost millions. He learned the hard way to follow the trend, not fight it. His story teaches us to let go of ego and trade with the market's flow. Step 6. Practical tips you can use today. 1. Create a trading plan. Write down your entry, exit, risk, and reward for every trade. 2. Follow the 1% rule. Risk only 1 to 2% of your account per trade. 3. Check the economic calendar. Stay updated on news and events. 4. Keep it simple. Use 2 to 3 indicators, not a dozen. 5. Review your trades weekly to spot mistakes. 6. Never stop learning. Read books like Trading in the Zone or The Intelligent Investor. Step 7. The mantra to win in the market. Friends, trading isn't easy, but with discipline, patience, and the right strategy, the market can be your friend. Learn from my mistakes, get inspired by my stories, and turn your dreams into reality. My dear friends, if you love this episode, please like, share, and subscribe to the channel. Your support means the world to me. Let's shine in the trading world together and learn from our mistakes. See you in the next episode. Until then, trade smart, love with all your heart. Bye-bye from Monsi.